Alright everyone, Cowboy Trades here, welcome back to the channel for another update on the market. So it's looking like volatility is about to snap back into these markets in a major way. Bitcoin alone just put in 190 million worth of liquidations. As we approach historical resistance, we've got a lot of important charts, oscillators, on-chain metrics to dive through today, letting us know that this volatility is going to step back in. And at the end of the video, we'll also update the SP 500, which is telling us the exact same thing. We've got some on-chain data, very important metrics telling us we are at a crucial level right now and volatility is about to come back. So let's dive into all of this and more, starting off with Bitcoin and the cryptocurrency markets. Like I said at the start, 190 million worth of longs has just swooped into these markets as volume steps up in a major way. You can see we are, as we've highlighted in our previous videos, approaching this major previous support, which we are currently retesting as resistance. This was major support throughout this entire distribution phase while we were at the top of the bull run, and we're retesting this for the first time since around about June of 2022. So this level right now is very important. The total cryptocurrency markets as well, looking at some higher time frame charts before we take a dive into the lower time frame ones. As we've also highlighted, the total cryptocurrency market cap is retesting the 618 Fibonacci right now. This week and last week, we were touching this 618 Fibonacci, deciding how we were going to react to this, and it looks like we've put in a strong rejection. Total cryptocurrency market cap is down about 4% today. The total altcoin market cap is down about 4.5% today. We didn't quite hit the 618 Fibonacci. The altcoin market is showing a lot of weakness compared to the total cryptocurrency market cap. So much for that alt season that everyone is talking about, because the Bitcoin dominance is right now making a super strong bull flag at this moment in time, looking like it wants to make a strong breakout. If we do break out, we may see the Bitcoin dominance rise a further 10 or 11%, almost 11% up to about 53%. If we do zoom out on the daily time frame for the BTC dominance, you can see if we clear this up, the Bitcoin dominance is actually at a pretty strong level of resistance. There's a couple of targets that you do want to keep your eyes on for the Bitcoin dominance that we have not yet cleared. These are really these lines over here. In fact, I should probably highlight this as a red box. This is going to be a very decisive factor for the Bitcoin dominance. We are retesting this for the first time since June of 2022. When we previously retested this, we got a strong rejection. Are we going to reject from this again? Well, the Bitcoin dominance is looking pretty strong right now on this attempt back up to the upside. Like I said, we'll keep you up to date on how this bull flag plays out for the dominance. But right now, it's really not looking too hot for the total cryptocurrency market cap. The altcoin market cap is looking even weaker. So it's looking like the dominance is about to take a major run to the upside as altcoins get wiped out a lot harder. Now, while we've got this going on, some on-chain data to dive through. If we look at the Bitcoin active addresses, you can see month over month, they've just been climbing since the 1st of December. They've just been absolutely on a major tear to the upside. If we look at the weekly time frame, you can see we haven't had the closing data point on this, so this, bear in mind, this can come down a tiny bit from where we are, but we are clearing absolutely ages worth of data. The last time, we have to come back all the way back here. We haven't been this high in 714 days for the Bitcoin active addresses. The last time we were at this level was this peak right around here, which was literally the top for the first peak in Bitcoin when we were trading around about 60,000 before breaking down and coming up to 69,000. If we do come back over to the monthly time frame, I have highlighted with these white vertical bars, showing you what happens when the active addresses top out. You can see active addresses top out, the price rallies while the active addresses run as well, and when the active addresses top out, price breaks down to the downside. This almost marked the December 2017 all-time high. In fact, if we come over to the weekly time frame, you can see it actually marked the exact top. So for some of these data points, we've drawn them over on the monthly time frame rather. If we do come over to the weekly, you can see how strong of an indicator this is. The active addresses are taking a tear to the upside this week while the price is breaking down. This is also, of course, paired with the fact that we do have major liquidations in the long market and also major volume stepping back in. Coming back over to the monthly, it's really simple to see. The active addresses addresses rally, the price rallies. When the active addresses top out, so does the price. All of these major tops on the active addresses have marked all of these major tops in the BTC USD price, and right now we're seeing active addresses come right back up to this major area of resistance, which we've really only had 2 touch points on: the 2017 all-time high, and also pretty much the first all-time high for Bitcoin when it was trading around about 60,000. We of course did rally back up to 69,000. The active addresses took a slight run back up to the upside, and then you can see after they topped out, we got further continuation back down. Active addresses heading up is a sign that we've got lots of senders and receivers in the network, potentially lots of people sending their cryptocurrencies around, getting ready to liquidate them. This is why we're seeing major volume step in and liquidations all across the board. So that's really what I wanted to update you on in the higher time frames. We do also come over to this chart here, do a tiny bit of TA. Like we've been highlighting, this was a major warning signal that we did talk about with the stochastic RSI. Now, since my last video, this has actually crossed bearish, and this may be letting us know that this exact same fractal where Bitcoin topped out at 69,000 is going to play out once again. If we do just look at the price chart, what I do want to highlight is, of course, what we've been talking about. Our major price targets are down here at 20,300. Nothing has changed from there. That is the CME gap that I do have my eyes on at this moment in time. You can also see the MFI has just literally pushed up to 80 and got a rejection. So previously, when we had the MFI this high, you can see this pretty much marked the all-time high for Bitcoin. So when you are in a bear market, when the MFI comes up to 80, it's either a sign that you are about to see a major nuke, or if we look back even further, you can see when the MFI sometimes hits, 90 or so, if you're in a bull market, this can correlate to a healthy reset and then another rally. Over here, where the MFI topped out at 89 in a bull run, it correlated to a healthy reset and then another rally. Either way, these were some major corrections back in the day before we did continue pushing up. So really, this MFI top right now is saying whether we're bullish or bearish, we're going to have a correction, potentially down to 20K. How we respond at that point is really going to let us know, are we in a situation where we can experience further growth to the upside? If we, of course, do start tearing to the downside, this will be letting us know that the MFI is calling for another bear market rally. And just like when we topped out at 69K, the MFI will have a lot of room to tear the price action down to new lows. If we do remove the MFI out of this picture, looking at the stochastic RSI, this was the fractal that I've been warning you on the channel. When we look back at what happened when Bitcoin took a run to 69K, you can see we had a slanted M pattern. We ran up, we made a high, we broke back down, made a higher low, and took this huge McDonald's pattern to the upside with a M pattern with a higher high. Or you can just call this, a zigzag, ABC, whatever you really want to call this. If you want to call it an ABC correction, if you want to call it some weird type of M pattern, if you just want to look at it and say, hey, we broke up, came back down, what I'm really highlighting is we took a rally to the upside, stochastic RSI crossed bearish, we broke down on the stock, price action broke back down, stochastic RSI bounced, stochastic RSI bounced, we took another rally to the upside. So you can see how these fractals with the tops in the stock, the breakdowns, reset, break back up, higher high, marking these tops. These are lining up absolutely beautifully with what we're seeing right now. And previously, when we finally saw this M pattern / double top play out in the stochastic RSI on the weekly, we absolutely melted to the downside. Once we received that first red weekly candle after the stochastic RSI crossed bearish, or the first major red candle, we proceeded to break down about 50% in the coming months very quickly. So if we're looking at from where we are at this moment in time, assuming that this could be that red candle, you can see us smash through that $20,300 price target. And if we do come down about 50%, we will be literally right on the lows, at which point, look at where the stochastic RSI is right now. We've got tons of room to come down and make new bear market lows in the higher time frames. Coming over to something slightly more recent, if we do look at the daily, you can see we've been talking about this regular bearish divergence playing out since this RSI top. This divergence has been getting stronger and stronger for about the past 93 days as we've been getting rejected on this trend line, rejections, grinding up on this trend line as the RSI makes lower highs each time. So if this bearish divergence is finally going to start snapping into fruition, we've got a lot of room to move to the downside, considering how over on the RSI it started to play out over on the 17th of January. That price target is down here at 21,200 for Bitcoin. So this divergence may allow us to come all the way down to the CME gap at 20,300. Of course, do bear in mind, this is really a higher time frame price target. I'm not saying we're going to be down here next week. I'm not saying we're going to be down here this month, or, you know, it's really something to keep your eyes on in the next month or so. In the lower time frames, this is what I want you to keep your eyes on. We have just put in a rounding top for Bitcoin. It is looking extremely weak right now. This is also looking like a picture perfect bar pattern with a price target all the way down at 27,800. Now, barring this price target, you can also see we do have a tiny bit of support built between 29,200 all the way down to some wicks, previous rejections, flip to support, rejections. Once we cleared this range, we were able to make this bar pattern. So this area right now, if you start to see Bitcoin break beneath 29,200, will come all the way down to the bottom of this box at 28,350. If we break that, we're going to come down to 27,800, at which point, if you do see, you know, multiple days / weeks worth of continuation coming down another $2,000, another $1,500 or so, as we do come down to 27,800 again, potentially coming back down to the bottom of this range at 26,500, you're going to see these rejections in the higher time frames, like off the total cryptocurrency market cap rejecting from the 618, the altcoin market rejecting from the 618, you know, making this double top / deviation over this range that we've been trading in. You're going to see so many signals, higher time frames, you know, rejections from this key box that we've highlighted. What haven't we talked about? We're going to see the Bitcoin dominance break out higher from this bull flag. Active addresses will probably break up higher with this. You'll see the divergence really start to play out as we come down to this 27,000, 26,000 region as well. These are all going to be signs letting us know that we're going to get much more continuation. And of course, with that continuation, this double top in the stock, as we keep on breaking down, is going to get stronger and stronger and stronger, and we're just going to be magnetized to these lower levels like 20,300, and then of course new bear market lows. So that's really what I wanted to update you on for Bitcoin. Of course, 20,300 is the major price target in the higher time frames. In the immediate short term, really keep your eyes on round about 29,200, 29,000 square. That will be making new lows on the daily time frame, and of course, we'll be breaking back beneath this previous resistance. We've just back tested this right now. We've got a really important decision to make in the next 24 hours or so. If we break beneath this, lower time frames as well, keep your eyes on 27,800. That is really a magnet zone in my opinion. Now, if you have been keeping up on the channel, you know that I'm currently not trading Bitcoin. I have seen better risk to reward opportunities in the other markets. Like I said, looking at my analysis, I've been telling you Bitcoin dominance is looking strong. The altcoin market is looking much weaker than the total cryptocurrency market because I think Bitcoin is much stronger than the altcoins. So subsequently, I've been looking for short positions in the altcoin market. If you do watch my alt videos, you know that we just put out a new trade for Cadena. We talked about this here. Cadena's next move, new trade. This was 4 days ago. We told you we were entering a 5x leverage from $1.12, and as you can see, the price is down about 11% right now, meaning that we're in 55% profit on this trade. So congratulations if you did manage to get into this KDA trade. Like I said, right now I'm seeing much more opportunities for shorting the altcoin market than shorting the Bitcoin market, but Bitcoin is looking extremely weak right now. The altcoins are just looking weaker. But with that being said, Bitcoin is looking weak. I think we're coming down to 27,800. I'll get a KDA update out very soon for you as well. So that's really what I see in the altcoin market. I've also made a lot of extensive analysis in the SP 500 recently, so I am going to fly through the SP 500 segment. If you have been watching, you know I've been talking about how insiders are selling. We also updated the Elliott wave theory and all of this, so I'm just going to dive through this. One chart that we haven't updated in a while is the iShares TIP ETF, the Treasury Inflationary Protected Securities. We are at the top of this major resistance, and as you can see, we are putting in a strong rejection right now with the Heiken Archies finally flipping back down bearish. Now, veterans of the channel know how important the iShares TIP ETF is. The TIP ETF, when this broke down into new lows on the 29th of August, this told us in advance that the S&P 500 was going to come down and make new bear market lows, because the iShares TIP ETF is a leading indicator for the rest of the markets. When this topped out over here on the 25th of July, this started to break back down to the downside. S&P 500 continued to rally. As the TIP ETF continued to break down, it told the S&P 500, hey, you need to play catch up, you need to start following me again. S&P 500 broke back down lower. iShares TIP ETF broke back down into new lows. S&P 500 had a rally for a week. As the iShares TIP ETF started to nuke, the S&P 500 followed. The S&P 500 is really a couple of trading weeks behind the iShares TIP ETF, and for the past 2 weeks, 3 weeks, we've been topping out on the iShares TIP ETF as the S&P 500 lollygags at this major resistance. So with the iShares TIP ETF breaking down, with the, well, let me talk about the VIX in a second. With the iShares TIP ETF breaking down, this is really letting us know, I mean, just look at this. When this tops out, it either immediately calls the top in the S&P 500, or it tells the S&P 500 a couple of weeks in advance, like it did over here, that we're going to top out and you're going to start following back down to the downside. When this broke back down to new lows, it took about another 4 weeks or so for the S&P 500 to break back down to the downside. A lot of the time when this tops out, like right now, it does it a few weeks ahead of the S&P 500. The S&P 500, as we've discussed, is coming up to this major resistance. If we look at our lower Elliott wave count as well, you can see on the daily we've just had a 1, 2, 3, 4, 5 wave correction back down to the downside, and we are seeing an A, B, C zigzag pattern right back up to resistance. So this C wave may already be done. This is the individual wave count I'm currently looking at for the S&P 500. The higher time frame one is this. You can see we've got a 1, 2, 3, 4, 5 wave coming into this 5 wave asymmetrical triangle A, B, C, D, E. As we come up to wave E in a bear market, in a falling market, this is where you see the break back down to the downside. So like I said, we've discussed all of this and more. I really just wanted to re-update you on this and let you know this is currently what I'm witnessing for the S&P 500. I think we're looking very weak as we are retesting this region. Corporate insiders have taken it upon themselves after the TIP ETF is breaking down in advance of the S&P 500. The S&P 500 is at resistance because of this. Well, maybe for other reasons. We don't know the rationale between corporate insiders. We can't speak to them, unfortunately, but we do know that the insider transaction ratio is rocketing right now. Insiders are selling. The VIX, which is the volatility index for the S&P 500, is also right back down at the lowest level it's been at since the 3rd of January, which was basically the top for the S&P 500. So like I said, a major move in the volatility is going to come very soon. I also want to wrap up the video letting you know government bonds are back on a tear. The 2 years up, the 10-year is up. They're up round about the same today. Actually, the 2-year, since I started recording the video, the 2-year is starting to outpace the 10-year, but the 10-year I really want you to focus on has just broken out of this bull flag. We hit the 786 Fibonacci, we broke back down to the downside, we retested the support from this bear flag, or bull flag rather, and now it looks like we are heading back to the upside. So my price target is still the same in the macro time frame. I think potentially we've got one more leg to the upside for government bonds, about a 27% increase in the rate for the 2-year, up to 4.5%. That's going to be a major tear in the 10-year government bonds, rather, not the 2-year. The 2-year government bonds as well will also no doubt take a huge tear to the upside. And because bonds are taking a major run up right now, with the 2-year outpacing the 10-year, you're seeing, the yield curve has just retested this major resistance level. This was previously support. Well, we did bounce on these while we were reverting back up to the upside. You can see these green boxes here mark when US recessions happen. So what's happening right now with the yield curve is absolutely brutal. If we take another leg to the downside for the yield curve while the government bonds take one final high back up to the upside, then when we do finally see that reversion back to the upside for the yield curve, this will probably correlate to one of the worst recessions that we've seen in the US in an extremely long time. I'm sure if you've been keeping up to date with the news on the US, you know that it's not just technical analysis that's going to do this. A lot of people are dumping the dollar in favor of different currencies at this moment in time. So the US strength in the total economy is looking very, very weak right now, and subsequently this US recession that the bond market is currently pricing in to be the worst one that we've ever seen may be absolutely brutal. So either way, you know, this is really something to focus on in the next 6 months or so, maybe the next year. It's not going to happen tomorrow. It's not going to happen in the next few months. What is going to happen in the next few months, what is going to happen this week, is this major retest on these volatility metrics, my friends. We've got a major move to be made in these markets very, very soon. And for both the Bitcoin markets and the S&P 500, all of these charts are letting us know that volatility is about to step back in a major way. So that's really all I've got for you today, my friends. Like I said, in the immediate short term, I want you to keep your eyes on 27,800. I think that is going to be a magnet zone. Once we do come down to there, we can really start focusing on these CME gaps back down at 20,300. As always, if you do enjoy my content, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want more of my post charts, memes, and economic data, head over to my Twitter at 618_cowboy. That's all I've got for you today. It's been your boy Cowboy Trades. I am out. Peace.